Any escalations from either side of the equation will take us to test the cycle high, 2,400, and this is now 2,430. I was referring to the higher cycle on the hourly, 2,480. And therefore will take us immediately to test 2,480, break higher to 2,500. All right, let's now take it to actual trading. Technically, we can segregate this. I can do a lot of segregations. All right, and pick an entry point at a level 3. Everybody knows now this system, but I believe it will not help us here because this is a fundamental trade. So let's just do the segregations. We can do all the segregations accurately, but anything that goes wrong, of course, and a lot appears to be about to go wrong on the ground, we'll just see the market fly and will have nothing to do with our segregations. And therefore, of course, we miss out on the trade, and it can be a very high move. It can really be a very high move. It can go a long way. And then, of course, you don't want to waste the entry. Okay, so we have a 1 and a 2. Appear to have an ending diagonal here, internal 1, 2, 3, 4, and a 5. So are we getting a retraction? You are seeing this. And this. We cannot, remember, have a leg 4 unless we see negative momentum on this 15 minutes. This is really true. Okay, so let's take a good look at this to understand the structure, why we would want to do a quick entry, and why the market is going to be moving very slowly and suddenly just take off. All right, let's understand how this will look like technically. Okay, so remember, if you have consistent positive momentum run, means you are doing a consistent wave or cycle. You want just one wave cycle. You want to call it anything you want to call it. I will call it a wave 3. I cannot have a 4. I have a bit of negative, very small negative momentum here. I believe we can all see it while I'm holding the right hand. So if I get a retraction 4, technically I should test the level 1. So I cannot really fall below 2,394. That's why I have my hedge at not very close to 2,394 so that I don't get hit, but maybe 2,390, right? Now I cannot move down to level 1 unless I see negative momentum on this 15-minute chart, right? Can I see negative momentum on this 15-minute chart if I do not have negative momentum on the 5 minutes, for instance? Of course, impossible. I cannot. Do I really have degree 3 negative momentum on the 5 minutes, given that I am moving in a ending diagonal, and an ending diagonal will always show very small measures of negative momentum, because this does internally segregate into a 1 and a 2, and then another internal 1 and a 2, probably 3, 4, and a 5, retraction back, bounce at that point, do a 3. All right, so these small negative momentum measures are really entry triggers because they don't give you time before they reverse. You will get a lot of them. Here, right? You don't want to even really consider them as a negative momentum, as something that will reverse, right? They will not reverse. I can only use them to label, that's all. And labeling at this point is not going to help me again because this is a fundamentally driven market. Anything that goes wrong on the ground will see the market fly, like we said earlier. So let's do the labels, but you don't really want to pay much attention to them because there is an extension. and there is an extension on wave 3. So what you are really seeing, we'll take this to the 1 hour, is a must, and all this is a flag, bullishly translated flag, that will just move suddenly higher. Remember, we're just looking at a 3-minute, right? So I have a 1 and a 2 because I have some negative momentum here. I have a 3 and a 4 bounced out of level 1. I have a 5, all right? But all this is just leg 1 into 3, that is all. Leg 3 must be the longest of the waves. And I have a very long and strong leg 1. I will take this back to 15 minutes and check on leg 1. We have a very strong leg 1. And we still get a 5. At that point, bear with us a second. Sorry for the disruption. All right, remember how the market structure works. There is not going to be a retraction from 3 to that 1 and a 4 until we see negative momentum on the 15 minutes. We're far from negative momentum on the 15 minutes. And if this has rounded up into an internal 1 into a 3, it's going to be doing an internal 2. It will bounce a level 3. This is a continuation. It will bounce. This is a level 3. So it's bouncing where it should bounce. Can we really take entries inside of such a very tight structure? You need to have a coding system on the station so that you read all the momentum numbers and get at the right time when there is momentum reversal, which is also would probably end up with the station refusing to take the orders in the first place. All right, let's take a look now at this more structure. Why is it reacting this way? You find a very small negative momentum here, so you are probably having a higher degree 3 already. This is an extension 3. And out of this extension 3, we have now done a 1 and an internal one, this level, 1, 2, internal 1, 2. This is a 3, and we're just doing the very small internals into 3. Probably to this effect, but it's just that. LX3 must take us to the neckline. We know this. Must take us to 2,445. Must take us to 2,455 before we get a retraction in a 4. Before you get a retraction into this shoulder level. And we are, of course, the whole market is fundamentally driven by the current escalations that we're having in the Middle East. So if this is fundamentally driven, let's take this now to 30 minutes. What you're going to get is a sudden move to the upside. Resistance to 2,470, resistance even higher. Before you get a correction back to the neckline at some point, and the market continues higher. This is because you have finished an internal level 1 already at the neckline. You are here at the neckline. Market will move higher to create a double head and support the neckline. So, and the move is going to be sudden and probably not related to any fundamental count. We just get we're doing a head shoulder and a head formation, and therefore, of course, we're moving inside of an ending diagonal that we have not yet sourced. But if I join these levels, for instance, I get another ending diagonal structure. If I do this, I probably immediately go to target, which is 2,500 at that point. That must be a wave 3 move, and usually it is very sudden, very strong, fundamentally driven. And therefore, it is, I believe, not necessary to do retractions and take retractions or take entries on a retraction. It will become very deceptive because once there is a fundamental feed into the market will just fly. It will just fly into a wave 3. And of course, we have all the projections, all right? And therefore, it will not do any correction into even if these labels are correct. We have a 1 at that point. 1 will get to 5, and then we'll get to 2. And we're going down back to, say, leg 1 or leg 3. You can never really be sure that this is going to happen. And probably it is not going to happen. And therefore, you cannot get an entry at, say, 2,420. Right now, market is, of course, 4,222. It's an excellent opportunity. Market will not go lower. Technically speaking, we can go to 2,410. We can go to 2,400. But our bias or our perspective, our experience perspective, is that none of this is going to happen. This is just theory. That's all. Trading markets is based on fundamentals. If the fundamentals are in an uptrend, we have to respect the fundamentals. We have to buy the market. So this is only if there is going to be a consolidation. Is the market now, is the gold market in a consolidation? No, the gold market is right in the middle of an uptrend because the fundamental factor overweighs everything. It's only after the fundamental factor has receded can we expect that we're going to get consolidation. And then we can think about buying into a retraction. Before the fundamental factor recedes, it is, let's say, there is no point in attempting to buy a retraction because there will be no retraction. It will not come at this point. And therefore, we would feel very justified, I believe, in buying, probably not really sure, moving inside of this leading or ending diagonal. We would be, like I was saying, would be very justified in taking the long market. I can now highlight the tradable labels. What we are really trading, what we perceive to be about to happen is breakout into this 1 and 2 into a 3. Exactly this. Any problem, anything that goes wrong on the ground, anything that goes fundamentally wrong will drive the market to the old cycle top, 2,480. If it's a severe fundamental, if this will carry on, if something goes wrong on the ground, then it has more implications, and it will go on for 2-3 days, and a lot of other parties or some other parties will intervene and so on. Of course, you'll hear it across the news, but it will be too late to act because the market will be at 2,420, 2,520, 2,535, 2,550. So the extent of level 3, it's a second head, depends on what happens on the ground. We have to assume that the worst will happen on the ground. Because if we assume otherwise, and the worst does happen on the ground, you see market at 2,560, we miss out on the trade. So we have to assume the worst. So this is a fundamental trade. We are just confirmed that there are no retractions and that the current level is an excellent level ready to buy into, that the hedge, supportive hedge, is just below level 1. But the move takes us at least to 2,500. If we are seeing something more severe, if something more severe erupts, well, you go, of course, to resistance 5, technically speaking, on this 30-minute chart, 2,580. So just consider 2,540, 2,560, and so on. All right, let's move to dollar yen. So to recap, the market is a buy. I wouldn't wait for retractions. I can actually have a hedge right below level 1, which is 2,395 or 2,400. But I would, if you want to set and forget, not keep looking at the chart, just take that hedge to 2,395. Should be over here showing 2,390, but it's perfectly all right to have it at 95. Have a target at 2,540. Also, this kind of situations, you can get a very strong spike and then fall back. You see here 120 on profit taking, fall back, and of course you don't want to miss out on collection. So you see here 127.2 is 2,535. We take it to 2,540. We're out. You may have a very strong spiral to the, and the very profit taking will see you back where you've started, like 2,470. And it's of course a head situation.